Your bank can legally freeze your money. They do not need your permission. They are not required to notify you in advance, and in certain situations they are not even required to warn you. This is not a conspiracy theory. It has already happened in modern countries. It has happened in the United States. If you believe your savings are untouchable, you are mistaken. It means you do not fully understand how the system actually works. Let me show you. What most people get wrong. Most people believe this. My money is in my bank account, so it's mine. Legally, that is not exactly how it works. When you deposit money into a bank, you are technically lending that money to the bank. Your deposit becomes the bank's liability. In return, they owe you access to that money. Most of the time, this system works smoothly, but in certain situations, access can legally be restricted. It is not stolen. It is not confiscated. It is simply restricted. And that difference matters a lot. It has happened in the United States. In 1933, during the Great Depression, President Franklin Delano Roosevelt declared a national bank holiday. Banks across the country were temporarily closed. People could not withdraw their money, not because the government hated savers, but because bank runs were collapsing the system. The goal was to stop panic, and it worked. But here is the important part. Access to deposits was legally suspended. That is a historical fact. You might say, that happened It was years ago. Fair enough. Let's move to modern examples. Cyprus 2013. During the European debt crisis, Cyprus experienced a banking collapse. Banks were temporarily closed. Withdrawal limits were imposed. Deposits above insurance thresholds were involved in the restructuring process. Insured deposits were protected under EU frameworks, but access was restricted. For many people, the money existed on paper, but they could not physically access it. Again legal, again documented. Modern freezes are usually smaller and more personal. Here is the part most people miss. System-wide collapse is rare, but individual account freezes happen every single day, and they are legal. Let's look at the most common reasons. IRS levies, United States. If the IRS issues a bank levy, the bank is required to freeze funds in the account at the moment the order is received. There is a holding period. After that, the funds may be sent to the IRS. This is written policy, no drama, no movie scene, just paperwork. And suddenly, no access. Sanctions and OFAC blocking. If a transaction involves a person or entity on a sanctions list, U.S. financial institutions are required to block the funds. No prior investigation. No let's wait and see. Block. Report. This can happen even if the match is administrative or under review. Again, a legal obligation. Suspicious activity and fraud controls. Banks operate under anti-money laundering laws. If an account shows unusual activity, large sudden transfers, rapid movement of funds, identity mismatches, access can be temporarily restricted. Sometimes this prevents real fraud. Sometimes it is simply precaution. In either case, access can disappear without prior explanation. Why do banks do this? Many people misunderstand this reality. Banks do not freeze accounts for fun. They manage risk. The modern financial system is built on trust. When trust is threatened, stability comes first. Access comes second. If freezing one account prevents a larger issue, the system will choose to freeze that account. What about bank failures? In the United States, deposits are protected up to FDIC insurance limits. However, protection does not always mean instant access. Resolution processes take time. Deposits above insurance limits may face additional delays. The system is designed to stabilize first, then restore access, not the other way around. The real question: if freezes are legal, if restrictions are documented, if history shows that access can be suspended, why does nobody talk about it? Because most of the time it does not affect the majority, until it does. And when it does, it usually happens at the worst possible moment. Mortgage due, payroll day, emergency situation, and the wheel keeps turning. This is not about panic. This is about understanding the system. Your bank account is not a vault. It is a contractual relationship, and contracts have clauses. In extreme cases, national emergencies, sanctions, systemic crises, governments have used temporary suspension powers. In personal cases, levies, compliance procedures, suspicious activity, banks restrict access for thousands of people every day, legally, documented in accordance with the law. What can you do? There is no need to panic. The solution is not to withdraw all your money. The solution is to understand the system and act with awareness. Know your deposit insurance limits. Do not tie all your liquidity to a single institution. Maintain short-term access buffers. Never ignore official notices, because most financial disasters are not caused by the freeze itself, but by ignoring the warning signs. Conclusion. The modern financial system was not built on metal vaults. It was built on layered trust and legal frameworks, and those frameworks prioritize systemic stability over individual convenience. Your bank can legally freeze your money, not as a threat, not as a punishment, but as a function of how the system is designed. And once you understand that, you stop seeing banking as a guarantee and start seeing it as a structure. If this video gave you a new perspective, don't forget to like and follow. The truth is hidden in history. History of money.